Okay, hi everyone. Welcome to this week's webinar. So we're just going to give about 2 more minutes to let more people join our session before we get started. So in the meantime, feel free to grab yourselves a drink, make yourselves comfortable. Yeah, and we'll get started shortly with about 2 more minutes. Thanks, guys. Okay, thanks for waiting, everyone. Let's go ahead and get started. So today's webinar will be on pivot point trading. And before we get started, as per usual, a risk warning. Our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. A disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the authors, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So I'm Melanie. I'm an investment analyst from Everest Watching Group, who are finalists for Best FX and Equity Research in the years 2019 to 2021. So here's our agenda for today. Firstly, we're going to be looking at what exactly are pivot points, followed by what time frames you should use, and then the different types as well, and adding them into your strategy. Okay. So what are pivot points? Oop. Okay. So pivot point is um it's a pretty popular trading analysis strategy that's commonly used by traders to determine potential levels of support and resistance in the market. So pivot points are basically calculated using the previous day's highs, lows, and the closing. So a series of points are derived from those values. Okay, so just for your information, if you're wondering how exactly can you implement it into your trading strategy, so you would first calculate the pivot point, okay, which is basically the average of the previous day's high, low, and close prices. And this is the most important level because it represents the um, it basically represents the points at which market changes direction, which is why you can then use them as support and resistance levels. Okay. And then the first support level is calculated as two times the pivot point minus the previous day's high. And then the first resistance is calculated as two times the pivot point minus the previous day's low. And then the second support and resistance levels are calculated by adding and subtracting the difference between the previous day's highs and those to and from the pivot point. Okay. Yeah, but we'll get into that in the next few slides. And normally these points are calculated for you already. So these points, it's important to note that the pivot point trading strategy should be used in combination with other technical analysis tools, because they tend to be predictive instead of lagging, which uses information from the previous day to calculate potential turning points. Okay. Some basic points. So this is what I was talking about how to calculate your pivot points. Okay. But yeah, as I mentioned, these are normally calculated for you. But yeah, so firstly would be to calculate the pivot point. Secondly, calculate the support and resistance levels. And then lastly would be to use the levels as entry and exit points. So if the market is approaching a support level, you can consider buying. And if it's approaching a resistance level, you can consider selling. Okay. Okay. So there are a few types of pivot points. Okay, so firstly, we have the standard pivot point. So this method involves using a simple calculation to determine the pivot point. So that's basically the average of the high, low, and closing prices from the previous trading session. And then the support and resistance levels are then calculated based on the pivot point. Um, Can you get the slides? I don't think that we send out the slides, but this webinar is recorded and I think it will be posted on YouTube, so you can refer to it whenever you want. Yeah, I think the IronFX YouTube is just IronFX on YouTube. Yeah, should be. Yeah, if you're unsure of anything, feel free to just email IronFX. You can get the email on the website. Sure, no worries. Okay, and then our second point is the Woody pivot point. So this method uses a really similar calculation to the standard pivot point that we just talked about. The only difference is that there is a different weighting of the pivot point. Um, yeah, the pivot point. So like the high, the low, and the closing prices. So the support and resistance levels are calculated based on the pivot point with additional levels of support and resistance added based on the difference between the pivot point and the high, low, and closing prices. Okay. Thirdly, we have the Camarilla pivot point. So for this method, it's based on a pretty complex calculation. Okay, it involves using multiple levels of support and resistance. And the formula for calculating the Camarilla pivot points includes four support levels, four resistance levels, and the pivot point itself. Okay. Okay, fourth, Fibonacci pivot point. So this method uses Fibonacci retracements to determine the pivot point and support and resistance levels. So the pivot point is calculated by taking the average of the high, low, and closing prices, and then adding or subtracting a Fibonacci retracement level from the pivot point to determine the support and resistance levels. Okay. And lastly, we have the DeMark pivot point. So this method uses a series of complex calculations as well, but the calculations basically take into account the relationship between the previous trading sessions, high, low, and closing prices. Okay, but also the current trading session's open price. So the main differences between the various pivot point trading strategies are just the formulas that are used to calculate the pivot points, but also the placement of support and resistance levels. So depending on your personal preferences and the specific characteristics of the market that you're trading, you can then implement these different methods. Okay, so let's look at them, look at the pros and cons for each of them. So firstly, we have standard pivot points. The pros of this is that it's pretty easy to use. So it's the most widely used pivot point method. It's also easy to calculate and understand, provides a good overall picture of support and resistance levels. Cons is that it may not work well in volatile markets, and it doesn't take into account the opening price, which may be significant in some markets. It's also less accurate than other methods in certain market conditions. Okay. Next we have the Woody pivot point. So some pros of this is that it's pretty popular with short-term traders. So if you're a scalper, this would be probably a better option. So this uses the current period's opening price and provides more weight to recent price movements. Okay. Cons is that it's less used as it's less effective for long-term trading and it may not work well in markets with low liquidity. Okay, next we have the Camarilla pivot point. So some pros of this is that it's popular amongst day traders and provides more support and resistance levels compared to other methods and can be used to identify potential breakouts. Cons is that it can be difficult to calculate as well as understand, and it might not work well with markets with low liquidity and may require more frequent adjustments compared to other methods. Okay. Next we have the Fibonacci pivot point. So this uses the Fibonacci retracement levels to identify the support and resistance levels. So if you are wondering what is Fibonacci, okay, maybe I will show you guys in a little bit. But it can be effective in trading in trending markets and can be used in conjunction with other Fibonacci tools. Cons is that it may not work well in volatile markets or markets with low liquidity and can be less accurate than other methods in certain market conditions. So it's all really based off of the current market conditions that you're looking at, as well as your own personal trading strategies. Okay, DeMark pivot point. Pros is that it's popular amongst institutional traders, and can be used to identify potential trend reversals, provides multiple levels of support and resistance. But cons is that it's difficult to calculate and understand and may require more frequent adjustments compared to other methods and may not work well in markets with low liquidity. Okay, so some time frames that you can consider when you're using this. Firstly, what I want to highlight is that for this time frame in this example, we're on the M15 view, and you can see that it's pretty unclear. Like the market structure is unclear. If we're looking at this example, when I change, it's the same chart, okay? If we're looking at the same chart but on a H1 view, we see that the market structure is a lot clearer. So the point that I'm trying to make here is simply that um, the clearer the swing low and the clearer the swing high, the clearer the trend between these 2 points, the more accurate your analysis will be. So here I'm talking about Fibonacci retracement, but of course, this applies for pretty much anything, like your pivot points as well, because especially for your Fibonacci pivot points. Okay, but the time frame formula for pivot point strategy for intraday it's H4 and weekly it's monthly. Okay, now let's take a look at some charts. Okay, let me just pull out my charts. Okay. Okay, so let's take a look at maybe pound yen. Okay, just a super random example to show you guys. Okay, so I like to start off by looking at it on the higher time frames first. So I'm gonna look at it from a weekly time frame so that I get an idea of where prices are headed towards. Okay, so on our weekly time frame, we see that prices are in an uptrend. On the daily time frame, we also see them in an uptrend. And on a 4 hour time frame, it's also pretty bullish, except there is a slight reversal over here. Okay, so let's go ahead and analyze this together. So if I'm using pivot points as support and resistance levels, for example, also let me know in the chat if you guys normally use pivot points. Okay, so I'm looking at this on the because my chart I'm using now is the 4 hour time frame. Okay, so I'm gonna change to um mm, okay, so if depending on which time frame you are looking at. So in this case, if I'm looking at the 4 hour time frame, you obviously wouldn't want to be looking at the quarterly time frame because it's a bit covers too much of the time frame. Okay. So you might want to stick with either monthly or even weekly. Okay. But I typically prefer monthly because weekly is a little bit um too recent. Okay, and I also prefer to just look at okay, if you look at here, the settings for pivots, this is the pivot point for standard. Yeah, the standard settings. Okay, so I will look at the pivot, the S1, but I don't typically like to look at the others because it tends to get too um convoluted and I don't like my charts to be too messy. Okay, so I like to just filter it out to just look at the pivot point as well as the first two supports and the first two resistance levels. Okay, so from here, this is actually a really good aid to help you determine where you should place your support and resistance levels. Because you can see here where my R2 is at, this is typically where you would place your R1 anyway. Okay, because your first resistance would be the closest swing high to where price is currently at, which is over here. Okay, so and then followed by, you see this R1 here. If I follow that, I'm at this next swing high, which I would have placed here anyway. So it's basically telling you, um, basically helps you to support your support and resistance levels. Okay. Oop, no, this is my first support. Okay. Especially in this situation my where this is the highest level, in the sense that I don't have any other reference swing highs where I can place my next second resistance. That's where these levels come in pretty handy. Okay, so we go in with this first, and then I can adjust it later with my Fibonacci levels. Okay, so I'm gonna place my first support there, maybe my second support here. Okay, okay. So because we typically want to follow the trend, and here we see that it's an uptrend, and on our daily as well as weekly time frames, we've also seen that it's an uptrend. So we'll typically follow the direction of the trend unless unless we think that price is gonna reverse. Okay. But from the start we would just go with the trend. Okay. So here now I'm going in with my support and resistance, I mean my Fibonacci levels. And here, the first thing I'm going to do is using a Fibonacci projection. So this tool here that I'm using, this tool, it's called Fibonacci extension. Okay, trend-based Fib extension, but we call it a Fibonacci projection. Let me just hide this so that it's not so messy. And you can see that my Fibonacci projection levels actually match up with my first resistance, first support, and second support. Okay, and in order to use this, we want to look for a flash kind of shape like this. Okay. Next, I'm going to go in with a Fibonacci extension. So for Fib extension, we are looking at the values that are greater than 100. So namely these two. Um, yeah. But you can look at this as well. Let's see if there's any others. Yeah, but namely those above 100. Okay, and for this, well, the kind of shape that we're looking for is a Nike tick. Okay, so it has to retrace 100% of the head of the tail, of the head of the tick. I mean, of the head of the tick, it has to retrace 100% of it before you can go in with this strategy. Okay, but you're basically looking for a V shape or a tick. Okay, so if we look at this tick here, this Nike tick shape. Mm, Okay, maybe I can draw it here instead. No. Okay. Yeah. So for my Nike tick, you can see my 127 lines up with my 100% as well as my first resistance here. So let me highlight it here. Okay, and then my second resistance kind of lines up with my 141. So I'm just gonna adjust it below here. And then we have a 161, which is quite a distance, so I'm gonna just ignore that for now. Okay. Okay. Now let's go in with a retracement. So for Fibonacci retracements, we use these 5 levels. Okay. And then you can see that my 23.6 lines up with my first support, and so does my 50%. Okay, so I'm just gonna keep those 2 levels. Mm, okay, so if I put back my pivot points, and change this to monthly like it was earlier, you can see that it has helped me to identify certain resistance as well as my support levels. Okay, you can see my R1 is at my first support, first resistance is there, supported by a whole bunch of Fibonacci values. So this helps you to get more Fibonacci confluence areas, which you would know is pretty significant because um, it basically areas of Fibonacci confluence, like over here, your first resistance, tends to attract price more. So then you can predict whether prices are going to reverse off of it, are going to test that level, so on and so forth. Okay, let's finish our analysis for this chart and then we can look at another chart. So as I mentioned earlier, we're going to go in for a buy because we tend to follow trends, right? So even though we see it reversing off of our first resistance, let's see, price is moving above the Ichimoku cloud and MACD is also giving us a bullish signal. Okay, so it supports our bullish analysis. Let's look at RSI. Okay, RSI is also giving us a bullish signal. Mm, cool. Okay, it's also giving us a bullish signal. And um, let's see. Let's look at EMA and SMA. Okay, we can see price moving above both of these values. So it's also giving us a bullish signal. Okay, so pretty bullish over here. Yeah, we might see a reversal back to our first resistance because it does tend to attract price. And when that happens, we can go in for a buy towards our next resistance, which is the second resistance here. Okay. Okay. Next. Any questions? Any charts you guys would like me to go through? Okay, let's go ahead and look at the Aussie dollar. Mm, okay, on our weekly time frame, okay, we see prices being pretty bearish. Okay, with prices moving in this descending trend line. So just to recap, what makes a valid trend line is if there are a minimum of 3 touches on our trend line. But here we have 4. Okay, but yeah, minimum 3. And then on our daily time frame, it is yeah, we also have a descending trend line. So also pretty bearish here. Okay, let's look at our 4 time frame. Okay, now 4 time frame looks pretty bullish. Okay, we see prices moving upwards. Okay, now let's go in with our Fibonacci, or rather our support and resistance levels, because we don't have any trend lines or trend channels. Okay, so here's my first resistance. Actually, because this is pretty close to where price is currently at. So I'm just gonna label it like this. Um, and then maybe over here for my first support. Oop, and here for my first resistance. Okay. Okay, now let's check this our support and resistance levels using our pivot point indicator. Okay, I'm using 4 hours. So my pivot time frame, I'm gonna put it as monthly. Okay, can you guys see how my resistance levels line up with my support and resistance levels? Okay, the only one that doesn't line up you can see is my first support, which is pretty far away from these levels here. But I can see that my support level here shows me that I can pull it back here. Okay, and then I'm in line with another one here. Okay, so you can use the pivot point strategy to support your levels and adjust accordingly. Yeah, but it can get a little bit messy, so you can always, there's always the option of um hiding it in the meantime while you are doing your Fibonacci analysis. Okay, so now that we've done that, I'm gonna go in with our Fibonacci levels, and you can see that, okay, my 78.6 lines up nicely. Just gonna keep that, and maybe my 100 as well. And let's see. Okay, I'm gonna check for a Fibonacci expansion. So for expansions, we use the negative numbers. So earlier for extensions, for the Nike tick, we were using the values that were greater than 100, and now we're using the values that are less than 0 for expansion. And for expansion, similar to projections, we are looking for this flash shape or like a lightning bolt kind of shape. Okay. So I can see that my minus 27.2 lines up with my first resistance. Um, Okay, I'm gonna ignore the minus 61.8 because it's pretty far away from where price is currently at. Mm, let's see if we have any other levels. Okay, I think I have a retracement over here. For retracement, remember we use these 5 levels. Okay, my 50% lines up, and so does my 38.2. Okay, so you can see the number of levels lining up over here at our first resistance. And I mentioned earlier that confluence areas tend to attract price, so we can likely expect price to continue to rise and be attracted to our first resistance. Okay, but you can see here my intermediate level, this dotted line, intermediate resistance. It does also have a bit of a confluence area because you can see I have 3 pivot point levels that are lining up with this area. I also have 2 Fibonacci levels lining up, and in itself, this is a multiple swing high resistance. Okay, it's actually even a overlap. Overlap basically means that there are swing lows as well as swing highs that are testing that area, which means that bulls and bears are respecting the area. Okay. Um, what else? Yeah, so you can see price kind of testing this area here. So you might see a bit of resistance in this area. Yeah, but yeah. So let's take a look at some indicators and see if price will be able to push up from it. The thing is that, okay, so we can see price moving above the Ichimoku cloud. So it's giving us a bullish signal. MACD is also giving us a bullish signal. And if you remember my daily as well as weekly analysis, we briefly saw that it's an uptrend as well. So a lot of upward pressure. So we are expecting prices to continue to push upwards. Okay. Okay, no worries. So, I just got a question. So the difference between the green and the red, green basically means uptrend or like bullish. So bullish basically means you're expecting prices to go upwards, like in an uptrend. And then red means downtrend, you're expecting it to go in downtrend. Resistance, we normally use the color red because you're expecting prices to reverse off of it, you know? So that's kind of a downtrend. Support, we are expecting it to bounce off of it, which is why it's green, so uptrend. Okay, and then um, I'm actually not too familiar with robo trading. I am aware of it, but I've never used it on my own. So you might have to do your own research on that. Um, yeah, but MT4 does provide access to automatic trading. Um, and yeah, but if you are looking to reduce loss and maximize profits, I think the most important thing would be to um, work on your like ensure that you have stop loss levels, you know your risk management techniques, which we do cover in some of our webinars. Maybe I'll just go through a little bit here. So in most of our my live trading, we use resistance as well as support, like I'm doing now. But basically, you could go in with, I guess in this situation, the intermediate resistance will be your entry, your buy entry, and then your first resistance would probably be your take profit. Okay. Yeah, but I just name it resistance and support so that you guys have an idea of how to recognize these levels. Okay. But yeah, your take profit will probably be here, and we normally recommend you to place it below any confluence areas, any major confluence areas like this, like before any major confluence areas, so that you are able to catch price before it reverses off of them. And then I guess your first support in this case would be your stop loss. Okay, and for stop loss, we would recommend you to place it below any major confluence areas. Okay, so I guess in this case, we'll place it like here, I guess. Okay, so just in case price reverses, um, you won't get stopped out from here. Yeah, but we do go through in depth in a couple of our risk management webinars. But yeah, that's just um, I guess the basics. But the reason why we normally use resistance and support levels is so that you guys can recognize that, this level here is a support level, and then this area here is a resistance because we are placing it at this swing high. Um, yeah, and we're expecting prices to reverse off of it. Okay. Okay, let's look at, yep, you're welcome, no worries. Let's look at another chart. Maybe let's take a look at gold. Okay, okay. So same thing, I'm gonna look at it from the higher time frames first, and we see price kind of reversing off of this multiple swing high resistance. Oh, yeah, if you're new to trading, you could actually we take a look at the forexarmy.com. Okay, so it looks like this. Okay, let me just drop it in the chat. So, yeah, there are a bunch of free trading guides. So if you want to know how to draw a Fibonacci retracement, so if you're wondering about some of the stuff that I talked about today, you can go ahead and take a look over here. Um, yeah, it just covers some of the basics as well as some risk and some trade management strategies. Like I mentioned earlier, we want to place the take profit before any major confluence areas and your stop loss beyond it so that you won't get stopped out. Yeah. So it just has a bunch of trading techniques and trade management advice over here. And if you're new to trading, you can take a look. Okay. Yeah, there's also some MT4 guides and tools that you can download for free as well. Yeah, that's just FYI. Okay, let's get back to our charts. So now on a daily time frame, we see prices kind of ranging. Okay, on our 4 hour time frame, we kind of see an uptrend. Okay, so yeah, that's at our support and resistance levels. So yeah, so if you're short on time, actually, you can just pull out your pivot point levels to help you to identify any support and resistance levels, like really quickly. Okay. 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 So you can see here, I have my first support Mm, okay, here's my first resistance, and this level here is going to be my intermediate level of resistance because price is pretty close to it as of right now. Okay, and you can see at all of these swing highs and swing lows, we have a resist pivot point or resistance level that has been identified for us already. Okay, so I'm going to get rid of that so that it's not so messy when I go in with my Fibonacci levels. Okay, so 38.2 lines up nicely. Mm, okay, okay, my 61.8 also lines up nicely. Um, okay, my 78.6 lines up. Okay, I think that's all the levels that we have. Mm, okay, my 61.8 lines up with my intermediate level, and I think that's it. Okay, so we see prices. Let me put back my pivot points so you can see the levels. Okay, and then we're gonna go in with our indicators again. So price is moving within the cloud, so it doesn't really tell us much as of right now. So if it moves above the cloud, it is a bullish signal, and if it moves under it, it's a bearish signal. So if it's within it, it's not really telling us anything. So I'm going to remove that. And MACD is giving us a bullish signal as well. RSI isn't really telling us anything. Let's see our EMA and SMA. Okay, price is moving above both of these indicators. It also looks like price is currently crossing over each other. So we could be seeing a change in trend. For SMA and EMA, these are lagging indicators. So typically when they cross over, um, it's after the trend has already started. So you can see here, when there was a downtrend, price crossed over only here when the downtrend kind of started like here, but it only started about here. This cross only happened here. So similarly, you can see over here, the uptrend started here, but then we're only seeing the cross happening over here. So just keep that in mind if you use EMA and SMA. Let's take a look at Bollinger Bands. Okay, you can see price moving. It's kind of cutting out of the upper band of the Bollinger Band. Okay, so yeah, also bullish signals. Okay, okay. So we can expect prices to continue to rise towards our intermediate resistance and towards our first resistance as well. Okay, let me know if you guys have any questions. Mm, okay, I think we have time for maybe one more chart, just really quickly. Let's go ahead and look at maybe DXY. Okay, so DXY, we see this steady drop here. You see on our 4 hour time frame, this looks really huge, but on our weekly time frame, it doesn't look very significant. Okay, sure, let's do dollar franc instead then, because we don't have much time. Okay, so on our weekly time frame, dollar franc, that it's generally a downtrend, I think, over here. Okay, on our daily time frame, okay, on our daily time frame, it does look a little bit of an uptrend. Yeah, downtrend again on our 4 hour time frame. So let's see if we have a trend channel. Okay, no. Okay, let's go in with our support and resistance levels. So I'm gonna go in with my pivot points again to help me to identify any significant levels a lot faster. Okay, monthly. Okay, I don't like there being so many levels. Okay. Okay, now let's go in with our support and resistance levels. Okay, we see this level here. Mhm. Okay, this is our resistance, and then our swing low, maybe over here. Okay, this is our first support. Second support, I mean first resistance, maybe just here. Mm, okay, yeah. So this is my second resistance. Okay. So same thing. Now we go in with our Fibonacci levels. Okay, we can see 61.8 and 100% line out nicely. Okay, and then okay, we can see this Nike tick here as well. Okay, 127 and 161. Okay, I'm gonna add another level here. Okay, so even though there isn't any pivot point here, I do want to, yeah, I want to highlight this level because we have a swing low here, a couple of swing highs, and it's also in line with this 127. So when changes to my first support and then my second support here. So when price um surpasses our 127.2, we can expect it to drop to our second support. Okay. Mm, yeah, I think that's all the levels that we have. Now let's go in with some indicators. So we're expecting prices to continue to drop. Price is moving below the EG cloud, so it's bearish. MACD is also bearish. SMA and EMA. Okay, prices are moving below both, so also bearish. Let's take a look at Bollinger Bands as well. And you see prices breaking out of the Bollinger Band over here. So it's of the lower band, so it's also bearish. Okay, so the more indicators you can get to line up with your analysis, then is the better. Okay. Okay, I think that's all the time that we have for today. Thank you guys so much for joining me. I hope you guys found this helpful. Yeah, have a great rest of your week, and I will see you guys next week. Bye, everyone. Thanks, guys.